This week we've got something special for you, which is a masterclass on scalping. Jean-François, who's running the program Intraday Scalping every month, does these masterclasses where we go and pick a topic. And this one is all about how to use top-down analysis for scalping. When you trade intraday, shorter time frames, how do you look at the bigger time frame, the bigger trend for your trading to work better. A couple of things to cover here are how to look at daily charts for the trend, how to look at zones in the market, especially for scalping the 1 minute chart. I think you'll like this one. A lot of cool value here. If you like it, then I'll put the details for Intraday Scalping below in the description, and you can check it out and learn more about how Jean-François trade and how you can work with him. But for now, we'll dive right into it.
So, top-down analysis. The reason why it's important and the reason why we use it specifically is because we trade intraday, right? So intraday is almost like a speck. It's nothing. We mean nothing to the bigger picture, right? We're very, very small money trading on the intermediate time frame. And so when you take a step back and you look at that bigger picture, everything happens because of, supply and demand. That's one of the basic facts, right? And then on top of that, we can look at it through the lens of expansion and consolidation, right? So it transitions from one state to the other, back and forth, right? We expand, so that's a breakout, or we consolidate into the next range, waiting for the next breakout, right? So going back to rule number one, sellers create the supply, buyers create the demand, right? So if the demand goes up, the price goes up. If the supply goes up, price goes down, right? That means the demand is going down. And that can be applied to any of the time frames. So top down means we're going to be looking at one of the highest time frames first, because that's typically where bigger money tends to be. Right? So bigger money has more control over the market. They're the ones that are creating the tide, right? They're creating the trends. They're the ones that have the ability to turn the market, right? So they're the ones that have the ability to create that breakout or that rejection, right? So one way to address all of this is to figure out what the richest people are trying to do, right? The ones with the most control. Once we have that intent in mind, once we understand what their coattails are trying to do, are they bullish? Are they bearish? Which way are we trying to ride their coattails? Right? So we look at that bigger aspect first. So that would be on the daily chart, right? So for us, we look at the daily as the highest of the time frame. We could take it a step further without any issues, right? We can look at the weekly chart, but we don't, that would be too much information. And since we're trading intraday, 5 daily candles is really not where we want to be, right? That's not where we want to be trading. So we'll take information from the weekly, just the same as we take information from the daily, right? First thing we do is we want to see directionality, trend, right? Are we going from the bottom left towards the top right on a daily scale? So let me squeeze this over here. And let's look at this over here, right? So on the daily scale, I'm on the daily. If I zoom out as far as I can. I put as many bars as I can. It looks to me like we're going from the bottom left to the top right, right? The current price is along this line. It'd be somewhat different if we saw something like this. Oops, sorry. That yellow line that's right there, I'm trying to recreate it. Right, so top left to the bottom right. Right, so when I look at the chart every day, I kind of envision this crisscross in my head. I see this crisscross. and I can see where we are, which quadrant that we're in, right? So I'm looking at this area here as being way more bullish than along this line here. Does that make sense? So right away, I have a taste for what's happening. I have the trend in mind. And lately, I don't know if you recall our last couple of sessions, I've mentioned we had the intermediate trend coming to an end, and we were starting to resume the dominant trend, right? We were resuming this, the dominant trend. We had to come to a conclusion, like we had to finish one in order to start the other, right? So one way to figure out what's what is by using trend lines. Okay, so we will be drawing on our charts, right? So drawing, get used to it. The more you draw, the more things become clearer, right? So we are following the market day by day, connecting the dots. And so if we were to just walk up today, realizing that this is driven by supply and demand, what happened these last 3 days? Demand, right? A lot of demand is showing up. And if I just compare today with yesterday, today is still opened. It's not a closed candle yet. Yesterday is. The demand today is clearly more bullish, more in play than yesterday, right? There is way more demand today. There's very, very, very little supply. Does that make sense? Right? So the price is going up, right? So all we're doing is comparing what we visually can see, right? Higher lows and higher highs. Very, very simple. This is called a comparative analysis, right? We're comparing one day against the other. We can do this anywhere along the way, right? Understanding that what we're looking at right now is not a closed candle, right? So from the top, from the daily perspective, we have a bullish environment that is resuming as of a couple days ago. And today specifically is adding to this bullishness. So it's not a counter trend day. It's not going against the dominant trend like we had been for the last couple of weeks. Right? So you can see just by comparing a day versus yesterday, you have a probability already sorted out, right? You're more bullish than you are bearish. And that's just by comparing two candles because of supply and demand, right? You're trying to figure out who is in control today, who has been in control is probably a better way of saying it, because this is 16 hours old. So in those last 16 hours, you're trying to figure out the bulls clearly have been in control, right? The last 16 hours created a higher high, created a higher low. And as I'm showing up to work right now, if I zoom into this on an intraday basis, so now that's a different group of traders, right? These are your local banks, the money changers at the airport, right? The people that give you a different exchange rate at every minute of the day, right? It used to be the bank would give you one rate for 24 hours, right? And then came along computers, and now we're getting if you exchange your money at the bank, you're getting a new rate every few minutes, right? So that intraday behavior has to be looked at intraday, right? And so the people intraday that do business intraday, it's because they're using yesterday's limits to understand where their risk is today, right? They're comparing their work today with the business they accomplished yesterday, right? They're doing so hour by hour. right? So we will repeat that same kind of behavior to figure out what the intraday folks are trying to do, right? And we do that by figuring out their recent ceiling, their recent floor, and we assume, based on what we saw on the daily chart, which one should give way first, right? So from our daily chart, we saw the green line getting greener, and we're now looking at what the blue line is doing relative to the green, right? So it's the same price action. It's the same price right now. This is the same price, right? It's the exact same price. It's just looking different, right? So we're trying to figure out intraday, how did those last 16 hours come to be, right? And what clues have they left us? Well, they left us a low right there. They left us a high right here, right? And so if we're doing this same comparative assessment, you know, if we're comparing one with the other, this is an hourly scale. Compare this current hour, which still has 47 minutes to go, with the hour before, which is already closed. Higher highs and higher lows. So this adds confluence to your top down, right? So now you have two time frames telling you the same thing, higher highs and higher lows. And here, threatening to break through the ceiling, right? So when we zoom into this on a 5-minute chart, assuming we're going to be testing the ceiling, we want to be looking for support and resistance inside of this known environment in order to pick up on potential pivots, right? So pivots are an area where one trend ends and a new trend starts, right? But we're looking at intraday trends. So let's zoom into this on a 5-minute. And if I put enough data, I can see levels, right? This is where demand and supply shifted in the past. Likely, supply and demand will shift at these levels again in the future, right? So supply and demand changed here. It changed here. It changed there. It changed here, right? Basically, supply exceeded the demand or the demand exceeded the supply, right? It's it's like a teeter-totter. It's like a seesaw. And if you're having difficulty trying to figure out what uh, what swings are meaningful and what you should ignore, right click on your trading platform, go to your indicators, whether it's MT4 or C-Trader, scroll down and find what's called fractals. All right, put fractals on your chart. Put a default of 5 because we're looking for the apex or the nadir in the last 5 bars, right? The nadir is the opposite to the apex. And so if I go here and I increase the size, we'll be able to see it better. All right, so now we have these pivots, fractals, right? Swing high, swing low. And as soon as we threaten one of these swings, right, we test and we break, or we test and we bounce. Okay, so ideally you'll have a pivot low representing support. You'll have a pivot high or swing high representing resistance. And you can do this from the daily if you want to. All right, on the daily, we are clearly moving away from this pivot. And we have yet to leave a red dot behind, right? This is breaking levels. This is breaking resistance, testing resistance. You see it, right? That red dot right here is the next one to go. Once we give way on this one over here will be the next one to go. Okay, so if you're bewildered where to look to your left, use fractals. And then when you're down on an hourly, same behavior happens, right? This is your ceiling. This is your floor right here, right? One, we assume, will give way before the other does. In this case, we're making higher highs. We're making higher lows. We're now assuming a higher low is forming, right? We're green. We're leaving behind this wick right here, right? We're forming a higher low as we speak. The bias is as simple as it gets, right? Are we moving towards something or are we moving away from something? And in this case, we're moving away from this blue dot towards this red dot. We're doing so on 2 time frames. We're doing so on 3 time frames. Right? This is screaming bullish. Does that make sense? Right? So by using fractals, it will simplify the difficult. It will remove a layer of the difficulties. Right? So from top down, you're always asking yourself, am I moving towards resistance or towards support? Am I moving away from resistance or am I moving away from support? Right? You can trade what you see because we're measuring facts. You know, we're comparing today with an average. Today we've done 85. The average is, oh, I removed the indicator. I don't have it there. All right. The average is 100. And so we've practically, you know, for all intensive purposes, completed the average. We're missing 5 pips. Right? So by comparing comparative analysis, by comparing the facts with an average, we end up trading a probability of something, right? Something continuing or something coming to an end right here, right? Something tested and bouncing before a break takes place, right? So you can see how we're looking through a telescope, right? We're looking to the future. We're looking outward. Right? When we're doing our top-down analysis, we're comparing with yesterday, trying to look at the end of the current day.
Well, I hope you got some value out of it. As always, hope you got some good advice from this. Make sure you take notes and implement this to your trading if you want to. If it gives you a good idea of how to look at the bigger picture for your scalping. If you want to see how you can work with us, check out the link below in the description. We'll guide you through all the details of elite scalping, how it works out, how you can trade with Jean-François live every single week. Links below for that. If you want to see more videos with Jean-François, check out the links in the corner over here. And I'll catch you back here in the next video pretty soon. Ciao.